Let's bring in the chart master, Carter Worth, to break down some key levels to watch following this week's sell-off. Carter, over to you. What are you watching?
Matt, right before we get to some of the charts, I think it's a pretty good example of how the market is ahead of the facts. What we see is weakness the last 2 days, but really, the KRE peaked on March 18th. This is June 18th, right? The industrial sector peaked 3 weeks ago. The BKX almost 4 weeks ago. The weakness of the last 2 days, news-related or not, Fed-related or not, has been underway for sessions and sessions and sessions. It's not out of nowhere. And what's been happening, of course, for 4, 5, 8 sessions? Things like Adobe and Amazon coming to life, meaning the market was ahead of the Fed, if you will, or figured out maybe what was coming. How that is, that's the genius of collective wisdom. In any event, let's look at a few things. The first is a table. And so what we know is that if you were to look at the pandemic low, we dropped 35%, and in the 15 months since, we've gone up 95. There have been 5+% sell-offs, meaning instances where we've dropped more than 5%, 6 of them, in fact. And the important thing is, what is the average decline of those 6 instances? And it's 7.8%. So as we look at the charts, just remember that number, down 7.8, and here we go. First chart, this is the chart that shows those 6 drawdowns, sell-offs, dips, corrections, whatever you want to call them, since the pandemic low. Next chart, this is the same chart again, but it's showing you the trend line that's been in effect since the pandemic low. And this week, we breached that trend line for the first time. The next chart are the last 2 combined. So here's our trend line. Here are 6 drawdowns. And so we are now below the trend line. What reference point can we use from here? The next chart, it puts together the trend line and the 150-day moving average. Next chart is just the 150-day moving average. And so were we simply to go down and touch the smoothing mechanism, guess what percent decline that is? Last and final chart, it is down 7.8%, peak to trough. And again, of the 6, 5% plus sell-offs, we've had 10ers, we've had 9s, we've had 5. 7.8 is the exact average. That's exactly where the 150-day moving average comes into play. I think that's garden variety and to be expected.
Wow. All right, Carter, thank you. We'll see you a little bit later on. Carter Braxton Worth of Cornerstone. Steve, what do you make of Carter's levels?
Yeah, I like it. He goes with the smoothing mechanism, which is the 150. A lot of people look at the 200-day. If we sell down, if the drawdown hits the 200-day, we're down a little over 10%. That's probably what people are looking for as far as trying to get back into value. So 6, half dozen of the other, either down 8 or down 10.
James, how about you?
The S&P's performance since last year, this time, and the recovery and follow-through post-vaccine announcement, post-election, it's just been historic. And I think, what Carter points out, Carter has to adjust his metrics to 5% moves. Normally you could kind of look at 10% moves after coming off of a big market crash like that. We've seen an enormous amount of buying for the last 5 months, and obviously the indication that that could stop is somewhat of a surprise to people. I think that S&P support has come in again and again and again, and you can count on one hand how many times it hasn't in an entire year. So I think that, there's still something to see what happens. This is not your father's S&P 500. The NASDAQ 100 hit an all-time high just yesterday. And the preponderance of the names in the NASDAQ 100 dominate the S&P. And so if we look at weakness in the S&P, we're really looking at non-tech names. We're really looking at a broader scope of firms that, may not participate in the recovery as strongly. And so I think it's difficult to look at the S&P 500 in the context of, long-term historical trends. And what we look at and focusing on this is looking at what all the indices are doing. And again, we're literally 1 day off of an all-time high on the NASDAQ 100. So I wouldn't take too much into account what's happened in the other indexes until we see follow-through on tech.
Shepard Smith here. Thanks for watching CNBC on YouTube.